Okay, so this is my PayPal base case here. I think this is going to make some people pretty darn excited. But basically, I have them doing about 8% revenue growth on average a year for this next 5 years. And I have them basically about double upping their net income in terms of the growth percent there and doing 16%. And if you look at like the latest quarter, for instance, that's a great example. On a GAAP basis, it's crazy numbers. It's like 400% growth. But on a non-GAAP basis, it's still, I think we're at about a double up or triple up of revenue right now. So I think it's pretty realistic that net income can grow at a much faster clip than revenue. And then if that all plays out there, you could probably slap a 30 PE on a stock like this, and you're at about a $217 billion market cap roughly, which we're sitting at a $50-something billion market cap right now. So that would be, and that's my base case, but we'll see. That's a net income margin there of about 17.7%.
And can you remind me, because I think PayPal sat in its history higher than 30 PE. I don't even think it was at that. I think it was 40 or higher. Am I correct in that?
Yeah, it used to be, very high. It used to be for sure 30 plus. And back in the day, there was some times when I think it was 40 or 50, to be honest.
You don't think it's coming back there ever again?
I think it's unlikely. I think we went through a fintech bubble. I'll be honest. Every fintech company out there, and PayPal is just one of those that got thrown into that. I mean, and it's funny. I remember being in the gym with Graham maybe a year and a half ago, 2 years ago, and I was telling him, because he was telling me, oh, this company just got this valuation, and I'm like, they don't even have revenue. And he's like, yeah, but they're basing it upon they're getting like $100-something per user. And I was just like, this seems stupid. This seems like we're going through a fintech bubble. So that fintech bubble blew up. That's long over. That's why SoFi is a $7 stock today, and why PayPal's $50. And I think it's gone way too far, but I highly doubt we're going back to 40 or 50 forward Ps on PayPal. That's just my opinion.
Do you not think that it's sometimes easier to justify a higher P ratio at lower market caps?
What do you mean by that exactly?
Well, in other words, like when you just look at the market cap in total, $50 billion is not that large. It's not that much physical money. So you wouldn't expect I don't know. I feel like you wouldn't expect a 50 PE on a company with a $2 trillion market cap, because it's so much actual money. I'm saying the actual market cap is so big. So because of the relatively small market cap compared to the big boys, it's just the theory.
Yeah.
It was 108. Look at that. Highest P, 108.
But it was around 50. I think, Chris, you slided through. What was the history?
Yeah. So right now, if you look at PayPal's PE, the highest it had recently was around 96 in May of 2020. And then it slid down right now to like 15.8 PE, which even if you look at like the MasterCard, the Visas of the world, relatively, if you compare them against each other, PayPal is a better value proposition than even Visa and MasterCard, with a tremendous amount of, what's the optionality in terms of margins for them. So if you look at, it's come down significantly in terms of PE. And then if you look at their operating,
well, what was the market cap relative to that? Like, what was the market cap when it was at 96, when it was trading at 96?
So look at May 2020, what it was. Yeah.
It got up to like a $300 billion market cap, if I recall, at one point. Yeah. So it was bigger.
That was definitely bubble.
Jeremy, do you think Alex Chriss can fix this? How do you feel about him?
Yeah, so that's a little bit of a different view than I have. I don't think there's anything to necessarily fix with the business model. I think there's a few things he can tweak and get in a better place. But I think it's a broken stock. I don't think he's coming into a broken company. I think he's coming into a broken stock. And he has to just tweak a few things in the business model and ultimately get the story of PayPal out. I don't know. It just seems like there's a lot of boogeymen out there about like, well, Apple Pay, what's that going to do to PayPal and Venmo, and FedNow, what's that going to do? And all these sorts
don't do shit. Like, we know it's not nothing.
I think the FedNow concerns are the only ones that are like keeping it literally where it is right now. Like if FedNow wasn't around, this would be trading at double the prices easily, So I think a lot of it is just speculation on their entire business model relies on that transactional revenue that they get from the interchange, of commerce. So the question is, okay, if FedNow comes around and the banks are able to do direct bank-to-bank transfers, these guys, their entire business model relies on that income. What happens? So it's all going to depend on FedNow adoption. If FedNow adoption never grows beyond a certain point, PayPal's a great place to be, because all that's happening right now is any additional income. Can you pull up my slide real quick, Amit? So if you just look at it from the perspective, like their operating income, even like lately, they've been recovering. Their operating income had gone in December of 2021 from 4.3 billion to 3.7, which is the downside. But look at their operating income since. They've been able to right size the ship by doing, like I said, the layoffs and everything else. And that operating income now is going into buying back shares, which means on an EPS basis, it becomes even better in terms of valuation.
Yeah.
Because all that happens is now your profitability has not necessarily been impacted that much. So as their operating income grows, so do their share buybacks. And look at this last quarter, that net income spiked, significantly. Let me just do it on a quarterly
And the
basis.
stock went down.
What the hell?
The Fed raised rates the day after.
Jeremy, why aren't they looking at net income?
Hey, that's it. Oh, how do you just want to kick off?
Chris got so excited. He's like, I got to go buy some paper.
I gotta go to the bathroom
right now.
It's Sunday, Chris. The market's not open. So, yeah, that's the beauty of being a stock picker in the market, because we're able to find these arbitrage of my opinion is Wall Street's got it wrong in regards to PayPal. And I think within probably the next 12 to 24 months, they'll realize they got it wrong. Last year, they got it wrong on Meta. Somebody was selling me Meta shares. I have Meta shares I bought last year for $88.94. Who the flip was selling me those Meta shares for $88.94? And now people are running over themselves to pay 300 plus. So that's the market. And that's the arbitrage. And that's the beauty of being a stock picker, where you're able to see these opportunities and you're like, this is stupid. Like, I'm gonna risk a little money here. I'm not going to bet the farm on it, but the risk reward's there, and you can take advantage of it, or you can not if you don't believe in it, right?
I think we've all invested in PayPal at this point on this podcast.
Okay.
This is our boy. So this is Brad. He's up 91% on Meta. This is the last 13F. He's down 40% on Snowflake. Snowflake's the biggest one of the holdings. He's up 30% on Uber, 85% on Microsoft, 100% on NVIDIA, 160, and then 36% on Google. So we got Google, NVIDIA, Microsoft, Uber, and Meta right. The rest are kind of losers. Roblox down 50%, GitLab's down, and then Snowflake's the biggest loser. So he's done really well this year. So I think it makes sense that he's taken off 50%.
You got to be careful of where you're getting this data from, because you see this right here. This makes you think that he had a 40% average buy price, like much higher. That's not the case. He got into it, or Altimeter Capital got into Snowflake in 2015 in a Series C. They made almost close to like $4 billion on this company. So when you're looking at these things, be very careful with like how you're looking at it. I will say one thing that does scare me a little bit, in that Ackman went for Google. So Ackman's been loading up on Google, whereas Brad Gerstner has actually unloaded Google, because they're Brad thinks that there is a huge disruption in Google search coming. I mean, he sold it like the 100. So I'm not so sure that his thesis relied on a lot of the newer projects that Google has with like, what is that thing called, with AI? But yeah, it's crazy to see how two industry titans who've been very successful investors have differing opinions and thesis. In this scenario, I think I'm more aligned with probably Ackman than Gerstner, but we'll see.
Yeah. Hey, by the way, Chris, are you still bullish on Snowflake? Because I've been doing a lot of kind of little digging around on Snowflake, trying to see if there's something there.
Yeah, no. You ask anyone, the stock price right now, there's definitely a disconnect. But if you ask anyone in the industry that you work in with, and you can ask anyone, Snowflake is the go-to for a lot of companies. Like, everyone uses Snowflake. They love the product, and it's still growing. The only thing is, like, it feels like an expensive value proposition if you look at it just based on today's numbers. But if you go like 10 years ahead, you'll see that this is actually a pretty good company to be in. When it got to like $400, definitely overvalued. There's a lot of euphoria in there, but that typically happens with companies that, when they come out during IPO, during a bull market. They've got great leadership. They're still growing double digit. So if you just do the math on it and look 10 years ahead, Snowflake will be a good company to be in.
Their net dollar retention is just ridiculous. I think that's the most insane metric for the whole company. I mean, just incredible. So,
Jeremy, how about you, real quick, let's do the super chat then, Carlos, I got you. PayPal going woke. Any thoughts on that? And I don't want you to get super political here, but is that a concern for the company?
No, I know there was something last year about that, but no concern in regards to that. All that stuff ends up passing by. Even like Target got hit by some of that stuff this year. it's the type of stuff. It might hit you in a little bit in the short term when it comes to your numbers. At the end of the day, if people like products or services, they're going to use that and they'll get past it. So can it affect numbers in a quarter? Sure. But I don't think it affects numbers over the longer term. That's my personal opinion.
So I want to get back to something that you said right at the beginning of the podcast, and I've been thinking about it ever since then. We were talking about 2024, and you said you actually have a decent hedge position on Apple. And so I'm curious because they're supposed to release the first Vision Pros in early 2024. How do you see that playing out? And what do you see as like the bear case? Like, why would you think that Apple would get significantly hit in the year where they're supposed to launch a new product?
Yeah, so that hedge there is more just like if the market gets hit in general. Like let's say S&P gets hit 10, 20, 30%.
They're so big.
Yeah, and if the market gets hit, Apple's getting hit. And Apple's trading at pretty rich valuations based upon its historical norm of the past, let's say 10 years or so. And so that kind of gives me a little more wiggle room there. And that's why I kind of made that move. But in regards to pros, I think they messed up. I think this is a first real innovative product Apple's done without Steve Jobs or Johnny Ive. Everything, Apple's ever launched was all Steve Jobs or Johnny Ive products, iPhone, Mac, iPad. And then it's just about, let's make it better, right? So this is a first product that neither one of those guys touched. Johnny Ive didn't touch, and obviously Steve Jobs didn't. He's been gone for way too long, right? And Apple's gone with this approach of like super high end. I mean, you talk about it's going to be like a $3,000, $3,800 price point out the door after taxes, right?
After taxes, probably at $3,500 retail.
Yeah,
it's not to say that it might not actually retail less, like probably $29.99, because they did the same thing with the iPad, where they announced it at a certain price, and then to give you that sense, there's a term for that where you announce it at a certain price, and then
it's called lying.
That's the term.
But when you do it as a company, it's not considered lying. As you know, you can get away with things as a company. It's whatever it was like a perceived discount. So if they would say it was $3,000 and you release it, people say it's high. But if you say it's $3,500, people are willing to pay for it. Then you say, you know what? We're going to put M3 processors in it. It's going to be $29.99. Boom. People feel like they're getting this idea of a discount.
That's sweet M3.
But yeah, so for Apple, they've always been the guys that are supposed to be like, get the younger generation on it. Cool. If we think about iPhone, it was all the younger generation was all who adopted the iPhone in the first several years, right? The business professionals like, oh, it doesn't have a keyboard. I want my BlackBerry.
It wasn't certified for enterprise for what, 4 or 5 years? It took security things.
Yeah, so it was the cool product. The younger folks are using it, college kids, high school kids, people in their 20s. Same thing with iPad. Freaking Jay Powell is now out there doing his press conferences with an iPad in front of him.
Yeah.
Like 10 years ago, you couldn't even conceive of that. Like what? Like that would be seen as so tacky. Like the Fed president's using an iPad. How ghetto? Like what? But so
anyway, he's gonna come up there with those because he's gonna come up there with that headset on.
That would be funny.
And be like, I see the interest rates going up.
Yeah, so Apple's always had that approach of let's get the younger generation. But the problem is the younger generation is not going to be able to afford this. So Meta's going to get the whole younger generation with the Quest 3 at a $500 price point. And so they're going to have those high school kids, college kids be able to use their VR and AR headsets. And I think that's going to push developers more faster. And I think Meta is actually going to win that race against Apple when Apple never really loses a hardware race. I think this is going to be the first one. But it's really, I think, because they got Tim Cook leading the show now, and I just don't think he's the visionary that Steve Jobs was and Johnny Ive were, where they could think about this stuff practically and be like, we need an iPod because the cool, at a cheap price because all the kids are going to adopt it and then their parents are going to buy it and it's going to be this great thing, right?
So you think growth will slow on the hardware side, but you don't think services that they've been killing it on will make up for the lack of the hardware growth?
I think it could longer term. I think services, they're going to nickel and dime all of us that are Apple customers for years to go in the future.
They're a toll keeper.
Yes, they're going to go up on
I did go to my taxes today, by the way. I'm late, but I'm looking at how much I spend on different companies. And so, yeah, there is an Apple tax for me just in terms of like the $9.99 they charge me. I pay for the
iCloud storage, the
iCloud storage, all the little games that you keep buying that you don't know they add up.
Yeah.
So there's probably like $500 going out the window just on services. So that,
or even like my ESPN subscription for something like this is weird. I go to ESPN.com. I subscribe to Apple, it. It freaking shows up in my Apple ID,
and they take 30% of that.
And they're somehow getting paid for it. I have no idea how they've stuck themselves in the middle of basically any money that
everybody.
can just
Yeah,
have.
it is. There is an Apple tax. It's real. I have two questions real quick. One was, do you actually use PayPal?
Yes. Yeah. By the way, a story for you real quick in regards to that. I never have ordered anything from DoorDash before, but I wanted to because they got Cheesecake Factory in North Italy on there, and I own Cheesecake Factory stock. Yeah.
We got to do it again, Vitaly. We got to do it again.
So I download DoorDash, and it gives me 5 payment options. One, obviously, credit card, debit card. Right underneath that was Apple Pay. Right underneath that, PayPal, Venmo, and then Cash App. So anyways, that's just something I like.
So did you use PayPal because you want PayPal to win, or you use it because, you know, it's the service you use?
It's the easiest because I click it, then it does Face ID, and boom, it's right through. So I maybe Apple Pay would be that easy, but it's just like PayPal. I'm just so used to like clicking PayPal, it, you know, reads my face, and then boom, it just pays for it. So
yeah, no, I use PayPal a lot. I actually looked at my PayPal transactions today too. They're immense.